For our next session, we have a gentleman who has transformed one of India's most iconic hospitality group into a powerhouse. And today, Mr. Puneet Chhatwal, Managing Director and CEO of IHCL, sits down for a candid conversation about what it really takes to lead at the top. Since his joining in 2017, he has led the company through a remarkable phase of transformation, driving both responsible and profitable growth while strengthening IHCL's global presence. Interviewing Mr. Chhatwal, we have Ms. Latha Venkatesh, Consulting Editor, CNBC TV 18, a highly respected business journalist known for her deep expertise in banking, financial markets, and macroeconomic trends. Please put your hands together for Mr. Chhatwal and Ms. Venkatesh.
Thank you very much, HICSA and Hotelivate, and Mr. Chhatwal for this opportunity. I never miss a chance to speak to Mr. Chhatwal. Gives you a very good idea of where India is headed. But for the moment, we have to expand our terrain and look beyond India, because the events are staring at us in the face. I had a more dreary set of questions yesterday. Today morning at 5:30 a.m., I revised the questions for obvious reasons. Things are looking less dreary. But Mr. Chhatwal, for starters, normalcy doesn't return in a day. There is a fear psychosis. I would assume Dubai would be almost every hotelier's dream destination. I understand that a year ago, same time, the occupancy rate was 80%. So how bad is the situation now? And in your experience of having seen geopolitical events, how long does it normally take to return to normalcy?
Latha, the situation in Dubai from 80 has declined to somewhere between 20 and 30. Just before we came inside the hall, I spoke with my colleague from Marriott, Raj, and he confirmed the same. However, he mentioned something very interesting. He said, we may have lost many people coming from different regions for this phase, but there are now a lot of Chinese coming in. So, some things just keep changing and evolving. So that's number one, that you may have different sources of business, because Dubai is still Dubai. Number two, the world has become, unfortunately, a difficult place. So geopolitically, we cannot do anything. But if you look at how things bounce back versus the past, so if we scroll back 25 years, 9/11, for almost 18 months, planes were empty. So those days, I used to go a lot to Minneapolis, and you could just, walk in the plane, you hardly saw anyone. Then you had Madrid bombings, then you had London bombings, then you had Paris, Nice, and the time period kept getting shorter from then a month to 15 days to 7 days. Now this one is a bit more challenging. So my guess is September, October, we should be in a fine place. But Manav opened this conference with a video on the king. Now, if the king keeps doing something in between, then I don't know, that's, then you have to say, Inshallah.
Yes, it is. Praise be to Allah is the favored phrase, I believe.
Yeah.
But Mr. Chhatwal, before I come to how this specific or such kinds of crises have to be handled by your industry, were there any collateral advantages or countervailing advantages? For instance, meetings in Dubai got shifted to London, or people holidaying in Dubai went to London or Frankfurt or New York. Did you, in particular, IHCL or the industry, see any countervailing advantages, or even holidaying in India rather than in Dubai?
Not yes and no. First is, this is like Schadenfreude, it doesn't help. We need Dubai. We also have hotels in Dubai, so 3 of them, 3 Taj properties, all very nice ones. So we want them to do well. It brings with it a lot of other issues. But having said that, it's not just the hotel sector. What happened to the airline sector? The tickets doubled. doesn't matter, economy, premium economy, business first. And because of that, the long haul travel became more regional and domestic travel. So definitely, India especially being a very strong and resilient domestic market, up till now has not seen any of those sufferings, maybe, minus 5% or minus 7%, but that creates the pent-up demand and it will come back very strong. Why will it come back very strong? Because the last 12 months have been like that. We started in April with Pahalgam. In May, we had Operation Sindoor. In June, we had the airline accident. In July, August, September, we had this unstoppable rains, which led to landslides, flooding. Israel-Palestinian conflict. Then there was this Iran thing was also going on, Russia, Ukraine. You name it, everything happened. And as if that was not enough, in the last month of the financial year, actually a day before, on the 28th of Feb, you start again with the West Asia crisis. So I think there's been a series of crises. It's not that this is a one-off. And we suffered a lot more when 50 airports were shut in India because of Operation Sindoor.
Fair point. Now you're giving reasons for your GMs not to fulfill their targets, so shh, don't tell them. Let me come to how you handle. The topic is not just a world on fire, but the topic for you and me is also to discuss, mirror, mirror on the wall, who's the fairest of us all or who's the strongest of us all. Now, what is the formula to get over this kind of a geopolitical problem? You've handled it in Sri Lanka, you've handled it in Kashmir. You all have a way to handle. How do you keep the staff motivated and in place? I mean, they could even fly away. How do you stay afloat?
Well, there is not one special recipe that you have. You have to do a series of things. For example, first and foremost, as a Tata Group company, is the safety and security of our people, including the entire ecosystem. So that means all employees of Tanishq or of Titan or anybody who needs any help, so we group together and then see what can be done, how people can be moved, whether from Dubai to KSA or to other places which are either closer or even brought back or even moved to Singapore, etc. So I think most of the global organizations did that. Then comes having an understanding for your owners. The owner was used to a certain cash flow, forget the cash flow is becoming a cash drain, even though temporarily. So you have to figure out ways to also mobilize those people. And for us, it was a bit more easy, and we are in that action mode because we are opening more than 3 hotels a month, so we need people. So I think for us to relocate people temporarily or permanently or even utilize that to promote people to next level because they have the Dubai experience is easier. The third is obviously how do you make sure that your business keeps going within the country, that how different things like LPG shortages, what if you run out of gas, how are you going to cook? What if the oil keeps growing the same way? What do you do? Because Emirates is like a very preferred airline of a lot of people, and Emirates was connecting to our hotels in Cape Town, London, and suddenly you see a drop out there and you see the pound going up and the dollar going up, and then your cash flow is missing. What all you need to do to compensate for those deficits? So I think a lot of that goes on, and it all happens simultaneously. It's not that you do this thing first and another one second. But I always say this room is full of great people who have seen COVID. They've seen zero revenue. We are not there as yet. If you could manage zero revenue over a prolonged COVID, what was it called? The wave 1 and the wave 2 and the wave 3 and
Delta
the
and
Delta and the thing. So I think this too shall pass.
Yes. Oh yes. Compared to what we saw, it's certainly different than if your hotel industry has their jargon. As a financial journalist, our jargon is mean reversion. There's always a mean reversion. The pound can't go one way, the dollar can't go one way, the crude prices can't go one way. There is always.
Only thing is people like this Hotelivate and Manav's team, they thrive when there is a crisis because more people go for consulting advice.
Okay, somebody's loss is somebody's gain. We can say that about journalism as well. For us, good news is business, bad news is also business. Though, of course, now digital is taking away our business. Okay, let me come to get away from Asia with just one last question, or get away from the global situation with just one last question. You know, up until the West Asia war, the Iran war, when we asked global managers, where would you put your money? Middle East, or rather West Asia, figured up there. They would, when we would ask them, when are you coming back to invest in India, since we have had 2 years of foreign portfolio investment outflow, they would keep saying, no, no, this is the growth story, and the other big growth story is the Middle East. It's just booming. That was the impression. So are you getting a sense that when normalcy returns, you will catch up and even see, like we saw in COVID, the slack giving you a huge bounce?
Yeah, I think this will come because India's story is not like a short-term story. So I think this whole concept of Viksit Bharat, India at 2047 is a real one. You know, if you are working proactively in various chambers and with the government, which we do, you know what the plan is like. So there will always be headwinds. We don't know exactly when they come, but I think India is in a better position to adjust the sails than anybody else has done.
No, 1 minute, I'm asking you more about Dubai. Are you expecting the return to be much better?
I thought you asked about. Okay, no, Dubai, I think it will take time. As I said earlier, September, October, things will start becoming okay. But to go back to those rates, average achieved rates and occupancy, it will take a bit longer.
No, my sense from the way the investment bankers were speaking is that it returns with a vengeance. Because the internal momentum in West Asia, according to them, Saudi Arabia, Dubai, Emirates, UAE, the pace of growth is an inflection.
It is not possible, Latha, because you enter into the very warm time.
Oh.
This is the challenge with Dubai or the Middle East is that the summer period is the low period, and it also has another Ramadan month.
Okay.
So the rates actually dip between these months of May, June, July, August. So it's a double whammy.
Fair enough. Okay, let me come to the story we are all more familiar with, and which is more clearly the longer term story, the India story. You know, after COVID, not just in the hotel industry, hospitality industry, even if you took Tanishq, if you took the entire consumer discretionary segment, just inflected up. That inflection point was unmissable. And since then, we have not gone below that 7% GDP growth rate, real GDP, shorn of price increases. Do you see that sustainable now?
Save for one-off, I think it's not only sustainable, it should grow faster. India needs to grow faster than 7%. It's not good enough. I think we need to get to 8.5 or 9. And the likelihood of getting there is good. It's not that it's very low, it's negative. I am a very firm believer that a lot more can happen and can be done and is being done. But between the policy making, execution and the results, it takes time. There's nothing like a magic stick that you wave and it starts happening, but there must be some reason that we have reached and stabilized at 7. So then you have, your financial journalism graphic, a little flat, then it goes up, then it settles down there. So I think in some point, maybe a year, 2 years from now, we should start seeing figures of 8% on a higher base. And if we get lucky, we might even go to 8.5. I am not with IMF. I'm not an economic journalist, but my common sense tells me if you could come to 7 when the world is, sub 3, then you can also go to, it's only 10% more than that. So it's not a big deal.
It shouldn't be, but what about your industry itself or IHCL itself? I think last year when I interviewed you, you gave me this fascinating figure that from the time of inception, which is what, 1905 till that day when I interviewed you last year, the number of hotels you had created, you're going to double in the next 5 years. So are you seeing an accelerated pace of growth? One of the best figures I saw from your investor presentation is 15 consecutive years of consecutive quarters of higher and higher record performance. Do you see 16, 17, 18 that way?
Are you alluding to the first superstar of Bollywood? 17 consecutive hit films or something. But, you know, we have today 375 hotels in operation. We have another 216 pipeline, which is taking the total to 630 approximately. If we are opening 30 hotels per year, then we have a very good chance of compensating and doing well on the not like-for-like growth additions. That's one. Second is your contract type and mix. So if you mix asset heavy with asset light, the operating leverage in your own portfolio, coupled with the margin expansion through the management fee income, is a very good way forward. And there are certain assets we want to own. I don't subscribe to the strategy of 100% asset light. It's some key iconic assets, especially with our tradition, have to be owned ones. The third is when you own assets, don't forget asset management. You can drive a lot of value by modeling, remodeling your assets, spaces, and it's all in your control. You're not dependent on a third party to do that for you. And finally, use all opportunities like we have done and gone from like 1 or 2 active brands to almost 12 brands. And I hope it settles down there for some time. But we just kept growing, and I think our brandscape today is one of our biggest assets after the Taj. Okay. Obviously, everything starts with the Taj. But today, the diversification of the brandscape, diversification of the top line, diversification in terms of our business model has made us extremely dynamic and resilient. The results is a consequence of that.
Okay, so the answer to 16, 17, 18 is a yes?
I would hope so, but we have given the guidance under, you use the word accelerate, but somehow our strategy is called Accelerate 2030. Okay. And under that, we have given that guidance of 700 hotels. We gave a guidance of 20% return on capital employed. We gave a guidance on, you know, same capital structure policy means zero debt. So whatever we are doing on our own is through internal accruals, and I think that should do the trick, save for any geopolitical or circumstances which are out of our reasonable control.
Forgive my persistence because of this quarter se quarter tak attitude that I have. Should we be prepared for lower margins for Jan, Feb, March as well as April, May, June?
No, I think important is to compare in our sector, which is my request to people like yourself, senior industry anchors like yourself. Q3 is our best quarter. Q4 is our second best quarter. You have to always compare Q3 of this year with Q3 of last.
Yes, it's a YOY comparison.
Yeah. YOY, I see no reason. I mean, if one thing as a sector we have learned is even if we missed a bit on revenue, how to control costs because of zero revenue during COVID. Yes. So that's not some kind of a rocket science.
Speaking of kings, you are the king of cost control as well. Okay, let me come to the space just beyond this year's quarterly margins and FY27 itself. Where do you see the hotel industry in India finding growth levers? Any new avenues of growth that look to you? I mean, I've seen in your group itself, homestays and wellness are all incipient avenues. For the industry, if you, as an industry captain, where do you see inflection points?
See, there are, number one, the hospitality story in India has just commenced 2-3 years ago. So if you start doing 7% GDP growth, if you become number 4 economy in the world, it is going to have side effects. And one of those is a positive side effect for hospitality, tourism, aviation, etc. The second part, which is important, is that this sector is in any way very critical for a country like India, which has a young population, because the tourism and hospitality is the highest multiplicator of jobs. And 1 in 4 jobs as per WTTC globally, new jobs, is created in this sector. So I think at some point we are lobbying and lobbying with the government to get something. So good news is we are doing well without having gotten anything. Just imagine if we start getting something. Number 3, the government spent on infrastructure which was, very well executed and is getting accelerated on the highways and train stations and airports and doubling of the airports and Udan scheme and, you name it, and the bullet trains and the Vande Bharat trains. That is going to tap on the latent demand, which has always been there but was not really tapped into. The next is spiritual. As you get richer, people have a higher need to go to the temple, like, please keep me protected. And to other places. So spiritual tourism is having a boom like it's never been there. I mean, there are people I know who are also in this room who went to Mahakumbh. I did not go. But it's amazing the number of people. It just changed the GDP of UP, and suddenly you saw like 17 to 18% GDP contribution came from tourism in UP. That it comes in Rajasthan, Kashmir, Goa that we were used to. So I think that also is a very big awareness situation. And finally, I think more and more people, when they get into middle class or into high middle class or into semi-rich or rich, would be spending coupled with the generational impact, because people are living in the now and not saving that I want to keep only gold, I want to have real estate, I want to, just go and spend. And I don't think that changing, as I said, headwinds may come, but over the next 25 years, it's not going to change.
So your idea of new avenues of growth would be more spiritual tourism, and of course, the mass affluent class itself rising. You're not looking at something like, homestays, wellness, those kinds of areas.
Well, we are in homestay.
Wellness, homestays perhaps.
I'll come to that also. Homestay, we are there. We created AMA during COVID. It's grown to over 350 plus villas that we have in a hub and spoke model. It's one of our hotels that helps run the villa. We don't have a separate villa team for it. But I'm very excited about our recent acquisition on wellness, and that has nothing to do with our spa, the J Wellness Circle. Atmantan. So I always say, our core values of Tajness, which is Taj, is trust, awareness, and joy. And the trust, awareness, and joy with Atmantan, which is Atma, Man, and Tan, is an ideal fit. And this is integrated wellness concept. And I think a lot will happen in this segment. It's been on the move in the last 10 years, but not in that speed. So we expect to have that as definitely another pillar of our income stream.
Well, just to add to Uttar Pradesh, hospitality is not the only industry which has realized that this is a big contribution. Two-wheelers. Rajiv Bajaj told me probably a few months back that one of the unusual contributions has come from Uttar Pradesh because the roads have improved so much, and so has law and order. So that means more women are driving two-wheelers. What I mean is there is a composite growth in the society. So maybe that is going to be a destination.
Absolutely, it's a good example. I flew the last weekend to Dehradun, and then we drove to Jim Corbett, and a part is Uttarakhand. Then you enter UP, and then you get back into Uttarakhand. So there was a clear and visible difference between the highways in UP and that in Uttarakhand.
Okay, fair point. So all that should contribute to the hotel industry. I don't want to end it on a negative note, but what we've been going through as a business journalist is the fall of the stock markets. Does the wealth effect impact? It's not yet impacted the mutual fund industry. Their SIPs continue to be, averaging some 25,000 crores a month. But do you think that this melting of the markets can have an erosion of the wealth effect?
I'm glad actually you mentioned that. If there is one thing that worries me is this wealth effect, because India has been used to making 10-12% as a minimum return on investment in mutual funds. And suddenly that number has been falling. And, psychologically, when you feel you have less, then you try to either avoid that extra weekend trip or you want to spend a bit less.
Yeah.
So I think if there is one factor which worries me is the stability in the financial markets.
Well, as we speak now, the markets are up over 1%. And while just about 2 weeks back, we were all bemoaning what we call correction region. That is when you drop 10%. So from 26,300, we had lost 2,600 points. Now the correction territory is over. And we are back in merely a dip. So it's quite possible.
I hope your words of your friend who you met, of it comes back with a vengeance, that's where I would like to see the markets go.
We hope so too, for our own reasons. Thank you very much, Mr. Chhatwal. It's always a pleasure speaking with you. And all the very best to the hotel industry.
Thank you. Thank you, Latha.
I believe we have to...
Oops, sorry. We have to pause.
Thank you so much, Mr. Chhatwal and Ms. Venkatesh.